Are you struggling to predict the market's next move? Do you want to trade smarter and with more confidence? Well, I'm going to use a simple, easy to understand strategy so that by the end of the video, you'll know exactly where the market has headed. You will also know how to make informed trading decisions. So stick around because I will be sharing a powerful piece of information that could take your trading to the next level. Good evening, everyone. This is Ruel Fernandez, your trainer mentor at Simple Trade with Patience, your channel for market insights. I will help you gain the confidence and clarity that you need to make smarter trading decisions. So if you are new, kindly go ahead and click that subscribe button. Hit that bell icon so that you do not miss on future updates. Now, friends, whether you are a beginner or an experienced trader, understanding the bigger picture is very essential for making smarter moves. As we simplify Nifty, Bank Nifty, and Finnifty, we are going to go ahead and do it in such a way that it will help you see exactly where the market is headed and where the market could change its direction. So let's go ahead and quickly dive into the analysis. Let's begin with Nifty. Now, Nifty has closed at 23,914, which is lower than the previous day's close of 24,274.9. We can see that the 50-day EMA is at 24,377.60. The 100 EMA is at 24,310.50. The 200-day EMA is at 23,566.60. Looking at this, it suggests that since Nifty is trading below its 50 and 100-day EMA, the short-term trend is a bit bearish. But as long as it stays above the 200 EMA mark, bullish sentiment would be present. The next support level for Nifty is at 23,743. And if it breaks below this, we could possibly see it drop to 23,572 or 23,271. Now, if this level breaks, we could see Nifty around 23,200 or 23,100 levels. So with the Nifty below the 50 EMA mark and the 100 EMA mark, I would say traders, be cautious and look for potential breakout or breakdowns around these levels. Now, there are a couple of zones which have been marked. The top one resembles a supply zone, which has already been tested a couple of times. And today it has given a beautiful move on the downside and has begun with a demand zone. This area between the two orange lines is a no trading zone. So I would advise you to avoid trades in this region. Now, if the market is between this region, you could look for bearish setups coming downwards. Look for bullish setup going upwards. Break of this, you could look out for a bearish setup. Break of this, you could look out for a bullish setup. Now let us go ahead and quickly take a look at Bank Nifty. So next up, Bank Nifty, we see it has closed at 51,906.85, which is down from the previous day's close of 52,301.80. However, Bank Nifty is trading above the 50-day mark of 50-day EMA mark of 51,575.80, the 100 EMA at 51,226.95, and the 200 EMA mark at 50,020. Now, as it is trading above all these important EMAs, the sentiment remains bullish, with resistance being placed at 52,517, 53,127, 53,494. On the lower side, we have supports being placed at 51,540, 51,173, and 50,562. Now, if you take a look at support, it's closer to the 50-day EMA. So this will play a crucial role as a support. And if this gets taken out, we could see Nifty coming down to 51,000 or maybe 50,500. That's one possibility. On the higher side, now since we have it in this area, you can look out for bullish setups. And in this area, look out for bearish setups. A break of this free area is a bullish kind of setup. Break of this area is a bearish setup. So there are possibilities that the reversals could be done at these levels. Now, since Bank Nifty is holding above the EMA levels, as I said earlier, the trend at the moment is bullish, but keep an eye on support levels to confirm the next move. From here, we move on to Finnifty. Now, Finnifty has closed at 23,919.60, with the previous close at 24,171.55. The 50-day EMA mark is at 23,773.62. 100 EMA is at 23,496.05. And 200-day EMA is at 22,753.26. Now, once again, similar to Bank Nifty, Finnifty is above the EMA. So we have a slightly bullish sentiment as the distance is not much. Similar to Bank Nifty, the 50 EMA mark and support 1, which is at 23,724, are in a closer range. So break of this could signal a bearish trend, a possible bearish trend, which could move down to 23,527, which is nearer to our 100-day EMA mark. And break of this could possibly drag down Finnifty to 23,200, which is a very important support level at the moment now. On the higher side, we have 22,247 as our first resistance, 24,572 as the second resistance, 24,770 as the last resistance. Now, Finnifty is holding above all key EMAs, similar to Bank Nifty. So we could see a bounce of support levels, and this support level, that's 1, would play a very important role. So similar to the indices, I would say this is a no trading area. Look for bullish setups moving upwards. Look for bearish setups coming downwards. Similar, look for bullish setup moving outwards. And at this region, look for bearish setups. You could probably look at an inverted hammer and a hammer on the other side. So hammer over here, inverted hammer over here. That could be one. If you're trading Bollinger Bands, you could use Bollinger Bands. You could use the EMAs. You can use these levels. So overall market sentiment, what does it say? What does the overall market sentiment say? Now, the market sentiment at the moment, we've seen a decline after quite a good move. That's due to selling pressure in IT stocks. Now, this has been driven by the pace of US interest rate cuts. there are concerns that it might slow down, which is a very key factor influencing global markets right now. So with the rising concerns over interest rates, the market sentiment is somewhat cautious and traders are waiting clear signals from global economic factors. So it is very important that you stay updated on news related to US interest rates and other global economic developments, as they can affect the market's direction. Now, as promised, here's that bit of information that will help you change your trading style, and that could bring a change in your trade. So I would say always check the volume and open interest data to confirm market moves. Now I have a separate blog on the website based on open interest. So higher volume near support or resistance levels can give early signs of breakout or breakdown. And what you can do is combine this with moving averages like the 50-day and the 200-day EMA for better accuracy. Remember one thing, that price is your friend. Price action is your best friend, but always combine price action with a technical indicator. And most importantly, I would say, is the exponential moving averages, the EMAs. These would give you a clear picture of the direction. Now, if prices are moving below the 50-day EMA, you need to be cautious of the downside. But if prices are holding above the 200 DMA, remember the long-term trend is still bullish, so you could look out for bullish setups around that level. Now, this simple combination can help you make better trading decisions. And trust me, friends, it does really work. If you found this helpful, give it a thumbs up, share it with your fellow traders. Let us know in the comments which index you're focusing. So thanks for watching Simple Trade with Patience, where patience isn't just a virtue, it's the key to successful trading. See you in the next video. The information provided to you in this video is purely for educational purposes only and should not be construed as a financial, investment, or trading advice. The content is based on technical analysis and market conditions are subject to change. Please consult a qualified financial advisor before you make any investment or trading decisions. The views expressed here are of personal opinions and should not be relied upon as recommendation to buy or sell securities. Trading involves risks, and past performance is not an indicative of future results. Thank you once again. Be safe, trade safe. Have a nice time.